Let's talk Homestyle, specifically Fannie Mae's Homestyle Renovation Loan Program. So the reason why I qualify the Homestyle Renovation Program is there's technically other types of Homestyle with Fannie Mae. You can have Homestyle Energy, accessory unit, manufacturer, community seconds, and I think even one for investors. Having said that, the Homestyle Renovation Program that we're about to talk about right now, that is also for investors. So let's talk about what it is. So the Homestyle program, Homestyle Renovation Program is just what it sounds like. It's a renovation loan program. It can be used to purchase and refinance a home. So the catch, not the catch, but the catch is that it's a renovation program that is going to limit you to how much renovations you can do. Now, in most cases, you're not even going to notice, and the limitation is not a big deal. What the program is trying to prevent is somebody from buying a house and just scraping it and then starting all new and just making it a construction loan. This is not new construction. This is a renovation loan. So the renovations are going to limit you to 75% of the home's overall value. You cannot do more than that in renovation. So again, they don't want this to be like a new construction loan. I would say the very vast majority of the time, that's not going to be applicable to most people. So just throwing that out there. So it can be used to buy or refinance a home. It can be used for primary properties, homeowners. It can be, or I shouldn't say homeowners, people who are going to live in the property. It can be used for second homes, like vacation homes. And it can also be used for investment properties. The credit score limitations are whatever the system approves. So I would say the guidelines technically say like 620 in some areas. The reality is, if the Fannie Mae automated system says yes, you're good. If it says no, you're not good. So even if you can have great credit, but if they just don't have any money or the debt ratios are too high, it may say no. So understand it goes through their automated process, which is normal. That's how Fannie Mae loans work. The loan to values. If you're buying a 1 unit home, well, heck, 1 to 4 units, I should say. I mean, that's what makes it residential financing. For the purchase of something you're going to live in, then it's going to be, and even for the refinance, if you're going to live in it, you can go up to 95% of a max loan to value. For a second home, technically the guidelines show 90%. I'm going to tell you that rate and mortgage insurance is going to be really expensive. So you might want to just consider the 20% option if you can. If not, it can technically go up to 90% loan to value. And then the investment properties can go up to 85%, but similar to the second homes, if you can get to 80%, you're going to like it that much better. So all that's to say, you can do it for any of those things. The actual amount of repairs that they're going to let you do, if you're at 95%, like you're buying this home, putting 5% down, they're going to limit you to a max renovation amount of about 100 grand. If you're doing 10% down, that's going to limit you to about 200,000. And then if you're putting 20% down, that's where they're going to limit you to 75% of the after completion value. Meaning once all the repairs are done, what does that new value look like? And they're going to limit you to your, which is a big number, right? They're going to limit you to a max renovation loan amount of 75% of that value. So that's a big number, but there you go. Those are your limitations as far as what you can do. As far as the process goes, if you're getting a loan amount under, and this can be subjected to, I'm sure various lenders may have their own overlays, but the general rule is that if you're under 50 grand for what you're wanting to do for the rehab, you don't need to do a whole bunch of extra work. We got to get like a third party contractor and get them verified and all this other stuff. If you're doing more than that, then yes, there's going to be some type of approval process where they're going to want to see the contractors had some, whether it's a 3-year work history or some references and things like that, that's going to be needed. From a rate and cost standpoint, your interest rate will be higher. Construction loans, rehab loans are just higher. It's more risk for a lender. I mean, think about it this way. If a family moves into a perfectly well-built home, not a lot of risk, they know they're going to make their mortgage payments. Here, you got a third party of a builder and all these contractors and vendors, and you don't know the timeline. There's just a lot more moving parts. So it's seen as having more risk. So the rates are going to be higher. How much? Hard to know. The markets change. I could say it could anywhere be about a quarter to half point higher in rate. That certainly wouldn't surprise me. From a cost standpoint, there are additional costs because now you got to do draw request and some other inspections and things like that as the process goes. Again, no certain number because it can vary by state, varies by project size, by contractors and inspectors, and how many draw requests and things like that. But I would say, just generically speaking, It wouldn't surprise me if it's about $1,500 to $2,500 more in additional closing cost on top of just the normal cost it takes to close a loan. So to recap, again, you can do this. It's a Fannie Mae product. You can also combine this with those other home style programs I mentioned, like Homestyle Energy. You can absolutely do that. Um, Again, you're going to be capped at either 100 grand, 200 grand, or 75% of the after repair value based on how much you do or don't put down. So 95%, 90, and then below that. Um, Beyond that, like I said, there's more to it. Certainly, as you go through this process, we'll be happy to walk you through that process, is what that looks like. But again, this is a really great program. The alternative might be Freddie Mac has one called Choice, and FHA's got 203Ks. And we'll do a separate video on this. We'll do a separate one for the difference between all those. But this is a really, really good product. Again, it's a Fannie Mae loan. If you have any questions, the Mortgage Mark team is certainly here to help. Reach out to us with any questions. And as always, when you think mortgage, think Mark.